Dear friends, welcome to weekly view on markets. Nifty and Bank Nifty consolidated during this week with negative bias and lost around 0.72 and 0.83% respectively. Broader markets outperformed as mid cap and small cap indices gained around 1% during this week. Technical charts show consolidation pattern and indicate that market will be sideways in the coming week also. Wholesale and retail inflation have been coming down, and it may give comfort to RBI for further rate cuts in coming quarters. Monsoon is widespread across the country, and good agricultural production is expected. High frequency macroeconomic parameters of Indian economy are in good shape. Quarterly results so far are is in line with estimates. Considering all this, there is possibility that market will give breakout on upside in near future. We will have to wait for that. Few good quarterly results of companies may trigger a breakout in the markets. Now let us look at performance of indices during this week. Nifty closed at 24,968. It lost about 181 points, that is 0.72%. So it is slightly disappointing that Nifty has closed below 25,000. Technically, it is a weak indicator. Bank Nifty has closed at 56,283, lost 471 points. Again, Bank Nifty closing below 57,000 is technically a weak indicator. Mid cap index gained 462 points, that is 0.79%, closed at 59,104. Small cap index gained around 196 points, that is 1.05%, closed at 18,959. India VIX has further come down. It is at 11.39. So low volatility in the market is indicating that market is in a consolidation. There is not much downside and also there is not much upside. Volatility in the market is very less. So this shows that market may consolidate in the coming week also. Most of the sectors gained during this week and few sectors lost. Media gained around 3.92%. Realty sector gained around 3.84%. PSU banks, auto, pharma, healthcare all gained around 1.5 to 2%. Consumer durables, FMCG, metals, manufacturing, energy sectors gained 0.3 to 1% during this week. Private bank lost about 1.93%. Information technology lost about 1.46%. NBFCs lost around 1.11%. Public sector companies, that is PSC index, lost around 0.83%. Infrastructure lost about 0.43%. All other sectors were consolidating with minor changes. Now let us look at technical charts. This is the daily chart of Nifty. We can see here Nifty has got good support at around 24,500 shown by this support line, and it has resistance at around 25,200 level. So Nifty is close below this resistance level. It had gone up to 25,500. After that, it has dropped and it has dropped below 25,000. Technically, it has become weak. We'll have to see whether it will come down further or a rally will be triggered from these levels. This is the daily chart of Nifty Mid Cap Index. Mid cap index has hit at around 59,860, and three times it has faced the resistance here and at this place and this place. So three times it has faced resistance around this level. It has come down, and Nifty mid cap index has good support at around 57,800. So we'll have to watch whether it comes down, or finally, if there is a breakout above this resistance line, then we will see Nifty mid cap index going to the all time high. Or if it drops further, it has got good support at 57,800 level. This is a daily chart of Nifty small cap index. Small cap index is trading in a very small range of 18,700 on the lower side and 19,200 on the higher side, just around 600 to 700 points range. It has been trading in this range for almost last 20 days, and all depends upon the quarterly results. If some companies give good quarterly results in the small cap index, then we will see a rally above this resistance level of 19,200, and Nifty small cap index also may go to all time high. If it drops further, then we have got good support at 18,700. This is the daily chart of Bank Nifty index. Bank Nifty index also is trading in a range. On the lower side, it is 56,300, and on the higher side, it is 57,600. So whenever it is hitting these levels, we are seeing that it is facing resistance and coming down. And at around this support line, it is going up. Now on Friday, it has closed on the support line, and major banks like ICICI Bank and HDFC Bank have announced results on the weekend. So these results are quite good. They are in line with the expectations. So I feel that Bank Nifty will take support around this level, and it is likely to go up in the coming week. Now let us look at some of the macroeconomic fundamental factors. Our economy's macroeconomic high frequency indicators continues to be good. RBI foreign exchange reserves is at 696.67 billion US dollars. It has come down by 3.07 billion US dollars during this week, but nevertheless, the reserve is quite good. It can take care of any shocks in the economy. Forex rate is at 86.15 rupees per dollar. Dollar index is at 97.27. Is foreign exchange rate is quite steady for last few weeks. Brent crude price is at $69.23 per barrel. Lower crude price has helped the economy. Trade deficit has come down due to the decrease in oil import bill due to the low oil prices for the past few months. This is quite good. The trade deficit coming down will help our economy. Gold is at 98,015 rupees for 10 grams 24 carat. Gold price is also quite steady for last few weeks. FIIs have sold 6,671 crore during this week. On few days they have bought, but for the full week they are net sellers. Domestic institutional investors have bought 9,490 crore in equity during this week. So we will see that DIIs are using every dip in the market to buy more, and this is helped by the SIP flows by retail investors into the mutual funds, and that money is coming into the market through DII inflows. Because of good money inflow and liquidity in the system, I don't think there will be a big correction. Retail inflation for the month of June has come at 2.10%. It is down from 2.82% in the month of May. Retail inflation and also the wholesale inflation have come down for the month of June. This gives good room for RBI to cut interest rates in coming quarters. RBI governor has indicated that further rate cut may be possible due to cooling down of inflation. Mutual fund investors should continue their SIPs. They should be, remain invested for better returns in the long term. They should not worry about the day-to-day volatility. And ultimately, I'm very confident that because of good macroeconomic parameters and improving corporate earnings, the market will go to higher levels and investors will get good returns in the long term. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can refer to your friends. You can ask your questions, which I'll reply. We'll meet again next week. Thank you.